Remember when mortgage rates were at an all-time low? Well, many of those mortgages are due soon for renewal. The Chief Operating Officer at FirstOntario Credit Union, Mark Perkins, has more now on what to consider, because you were telling me that 60% of mortgages held in Canada are coming due by the end of next year.
Yeah, the end of 2026. And you've hit the nail on the head as to why it's unique, is these are the mortgages that are coming out of all-time historical lows. So a lot of people will be feeling that payment pinch. Now, the good news is the inflated interest rates have come down since June of last year by about 2%. And these individuals did have to qualify at a rate 2% higher than their contracted mortgage payments. So qualification, like affordability, should be there. But again, we all know when money in our bank account, we tend to spend it, and those mortgage payments are going to be higher. So, and that's just individuals who are renewing. A lot of people will have to refinance other debts and things like that. And with mortgage rates coming back to what I call historical norms, there'll be new buyers entering the markets as well. So it's just something you got to be cognizant of, your mortgage payment and any other potential costs that come with it.
Mm-hmm. Are we talking a large percentage of an increase then in people's monthly payments?
So if you take kind of 2%, which is about where we are in the delta,
now, yes.
For every $100,000 of mortgage, you're about $200 a month in payments, a little less than 200, but in and around there. So if you have a $500,000 mortgage, you know, that's $1,000 a month in payment there. So it can be pretty significant and run up on you pretty quick.
Right. So what can people in that situation do now before the renewal comes?
Well, it's all about kind of having a plan, right? So the good news is for renewals, you don't have to qualify with the stress test anymore, but for new purchases and refinances, you do have to qualify at that higher rate. And the thing I see a lot is people are unprepared for kind of all those nickels and dimes, and there's nothing more frustrating than feeling nickeled and dimed when you're making kind of the biggest investment that you're going to make.
Right. This is especially for first-time purchasers, because there are things that have to be paid out of pocket. There are things you can't roll into your mortgage.
Right.
And thousands of dollars that need to be paid when a deal closes.
Yeah, so you have things like legal fees, title insurance. So that's for individuals, or that's most mortgage lenders require this. It's to protect you from title fraud, from encroachments, from liens on your property. Which we've seen a lot more of lately. Right, and while there's a cost, a few $100s to it, the costs, if you actually have to fight this in court, can escalate to thousands or tens of thousands very easily. New home buyers or refinance, you've got appraisals, building inspections went away in 2000, 2001, the desperation to get properties. That's a really responsible thing to do, and there's a cost to that. The one thing I want to talk about a little bit is creditor insurance. So when people get a mortgage, they often get insurance for unexpected or untimely death, but there's another category that we call job loss or disability. So when you think about the U.S. tariffs, the potential impact on the economy, the ensuing trade war, there will be job loss in Canada if that happens. And if you are in a susceptible industry like auto, manufacturing, some energy, you want to reach out to your lender now. You want to talk to them. You want to see if you can get this, because it will help make your mortgage payments during that piece of transition. The most surprising one to me is the land transfer tax. And it's surprising because people often don't think about it. And that's the 11th hour urgent piece that we often as a lender get hit with if someone hasn't planned for it. So 1.3% of the price of your home, you are paying in a tax to the provincial government. If you're in the city of Toronto, it's double that, because the municipality charges the same amount. So $1 million home, that's $13,000 of extra cash you need to have planned for at that time. So you want to make a plan, you want to be prepared, no blindsides, no surprises, because it can really upset what should be a very joyous situation for you.
Okay, some very timely information there, Mark. Thanks very much. And if you've got a question, a financial question or a topic you'd like covered, email us your questions to financefriday@firstontario.com. And if your question or topic is covered on air, you'll get a gift card from First Ontario.